So we've been getting a lot of questions lately about people with a lot of extra money in cash sitting on the sidelines, waiting to jump into the stock market, trying to time it right. And it turns out this is a trend. You are not alone if you are in that camp. It's something that's happening all across the country and the world. And so Janine's going to break down for us today why this is the case, what to do about it from an individual standpoint, and provide you with some helpful information. So let's get to it. Janine, welcome to the podcast once again here on Rockin' Retirement. And it seems like you are getting a lot of questions from people who have cash sitting on the sidelines, trying to time the market. We're already saying some bad words here and creating some red flags. But this is it. The people are not alone, right? There's a lot of, if you just look at the stats, there's a lot of money on the sidelines globally right now.
Yeah, about 8.3 trillion, which is a lot of money.
Well, so what's led us to this? What's led us to having all this money and kind of put that in context and what it means for us as individual investors?
So what happened in 22? So already it's 2 years away. 2 years back.
That's right. Yeah.
Because people got scared in 2022 because everything was affected, bonds, et cetera. So everybody's like, oh my gosh, I'm flowing to cash. I'm going to just go to cash because equities just suck and the portfolios are disastrous. But what was last year? Last year was a phenomenal year. So if you left it in cash, you missed the run-up. It was 26% in the S&P and 44% in the NASDAQ. 44% for the NASDAQ, which, it's not like anybody's portfolio is solely in the NASDAQ.
Right.
But, what happens is people get fearful and they don't move until the market's already back up. And so what is it? The Dow, I think, as of yesterday, was at 38,000. Holy smokes, Batman, you've missed the run-up. Now, Is that going to continue? Then maybe you should be getting back in. Well, that's probably what's going to happen because if you look historically, this is what happens. And just to give you a real quick story, in 2001 and 2, what happened? The market tanked in 3 years in a row. But in 95 to 99, the market was a huge buildup. The greatest amount of money poured into the market in February of 2000. And by July of 2000, the greatest amount of money was running out of the market because what happened? The market built up in the 90s and then it crashed in 2000. So people got in late, they bought high, and now they're selling low. Classic investor behavior. It's what people do because it's all about the emotion. So that's why you need to work with somebody who's going to keep you disciplined and help you control the controllables because nobody knows what the market's going to do.
If you I know you can't predict what's going to happen this year, but so it's like you're seeing a similar thing. 22 people got out. They stayed out in 23 and have missed the run-up. We still have all this cash on the sidelines. People are getting antsy, wanting to do something with it, and so now the market's doing good. Everybody's feeling great, and you're seeing. It sounds like you're seing a lot of that $8 trillion going to get poured into the market this year.
Yeah, because now I'm hearing, oh my gosh, I got to put my money somewhere. I'm tired of it sitting on the sidelines. I'm like, I tried to tell you this last January. But this is classic investor behavior. Wall Street knows it. So that's why you get all these headlines. But the real question then is, what is your real, people need to evaluate what their real risk tolerance or loss tolerance is what I call it. What should it be? And so that you can stay disciplined so you can catch these upswings because nobody can really time the market, not even the pros.
Yeah.
So it's having the proper allocation, diversification, the proper portfolio for your risk that you can live with. And then you don't end up with hundreds of $1,000s. Now I realize people have emotional cushions, and that's okay.
Yeah.
But in general, if this is supposed to work for you, you need a plan for it to work for you.
So let's say here in February of 24. I've got $200,000 in cash. Some of it's for my emergency fund, but certainly don't need all of it for that purpose. So, and I come to you and I say, what do I do? Do I go ahead and get in now? Do I stay out? How do you go about answering that question for somebody?
Well, then you have to go, we would have a discussion about, okay, let's talk about risk. What's the money for? What's important to you? And long term, what's your timeline? Because everybody says, "Oh my gosh, I only have 10 years. I'm going to retire, or I'm now in retirement, and I only have." I go, here's the deal: you have the rest of your life. Your timeline is your whole life. So how do you allocate a portfolio? If you're risk averse, then there is a portfolio for you that will work. It's important to understand it so that you can stick with the plan. So yes, if you have cash on the side and it's time to invest, there is a way to do it properly.
Gotcha.
And that's
Yeah.
what we help. I help a lot of people do that.
So set the timeline, and then you'll figure out whether to be in the market or out of the market based on what that money's needed for.
Right, right.
Yeah. Okay. Very good. Well, if you need help in that situation, if you're one of those folks that's asking those kinds of questions, what do I do with this money that's sitting on the sidelines? I went to cash at XYZ month, and now I don't know what to do. Janine can help navigate you through that conversation and figure out your right next steps. And this is a good year to get your finances in shape. It's an election year. There's going to be a lot of news. There's going to be a lot of things tugging at your emotions this year. So it would not be a lot. It would not be a bad idea to get an advisor on your side who can help kind of cut through those emotions and help you make smart financial decisions. And so if you want to talk to Janine about that and set up a complimentary review, that's a great starting point. You can do that by calling 443-718-6311 or go online to theuswealthadvisors.com. Contact information in the description of today's show. Janine, thank you for the help and guiding us through an interesting problem that folks are facing this year, but I think a lot of people are in that same boat.
Yeah, I think so.
Absolutely.
And you're not alone. In fact, you're never alone in some of these things.
Yeah, there's always a second person or more asking the question you're asking.
That's right.
I think we've definitely noticed that over the years. All right, we'll see everybody next time right back here on Rockin' Retirement.
Okay, thanks, Walter.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.